Howdy, Jacob here. Today we're looking at KLA Corporation. I'm assuming that's not Claw. So, Claw Tanker Corporation. Definitely said that wrong, but 97 billion market cap on 98 billion enterprise value. Already well-established company, producing over 10 billion in revenue. Huge growth though, seeing less than 3 billion in 2014, with gross margins slightly higher, operating margins 12% higher, 38% operating margin for this business in the semiconductor equipment industry is extremely attractive. They do pay a good dividend, though. We'll see how much that is. It looks like in relation to earnings, you're probably looking at 20 to 25%, which seems pretty reasonable to me. But look at this ROIC, 40%. That is absolutely astounding. Looks like as long as history, if they're able to find what they have in history, they'll get a massive return on that investment, reinvesting back in the business. That's great to see. Balance sheet perspective, 3.2 billion in extremely liquid assets with just 5.9 billion in long-term debt. No concern there. I mean, they're producing, that's less than 2 times, not even net debt. So that's very safe balance sheet. The company's been producing very positive free cash flow, heavy reinvestment, which you can see through capital expenditures going from 68 million to 342 million. They are definitely trying to increase, revenue, hopefully efficiencies and everything. And their cash from operations has also jumped pretty immensely. So use of cash on the reinvestment side, you're probably looking at not that much actually, maybe 15%. And then recently the dividend is paying out probably 25%. Um, and then common stock is the biggest use of free cash flow recently, which is also inflating the ROIC, making it look like it's higher than it actually is. But even pre buying back a bunch of shares, they were in the high teens, I would say average. So also still very good returns on investment. This reinvestment, if it gets at those 20% plus rates of return, that's fantastic. That's exactly what this company should be doing with that money. And then, buying back shares if it's cheap enough. Is it cheap at this price? I'm a little bit skeptical, but let's see. Okay, so revenue growth, great growth. Since 2017, their lowest growth is 13%. Yeah, I mean, let's say 10% a year with a 20p price free cash flow at the end of that 7 year period. And then on the margin side, it's been very high recently. I'll probably push towards the heavier end of these averages, let's say 30 and 31%. And then on the share change side, let's see, they're at 100 billion, so 1% would be about 100 million. That doesn't sound right. Wait. 1% of 100, yeah, would be a billion, so probably not paying more than 1%. I feel like uh, you can't just judge it off of here because you have to understand that that's one of the uses of free cash flow. And so this 7% repurchase at the current market cap would be them paying roughly $6 billion, and they cannot sustain $6 billion. Their greatest earnings on free cash flow is 3.3 billion. And so again, do I think their free cash flow is going to grow? I absolutely do. But the 7% as an average, given that they also reinvest, pay a dividend, I'm not comfortable saying that. So maybe I'll bump it up to 1.5, and then on the dividend side, I mean it's only 25%, but I don't want them to be growing it too much. So I'll probably grow it with their. I mean, this is high growth, but it's growing with their revenue to where essentially their percent of payout is unchanged. And so we get to a price that needs to fall 46% to get the return that we're looking for here. I mean, again, from a numbers perspective, everything I'm seeing is fantastic. The growth is absolutely astounding. Their return on invested capital, amazing. Their use of cash, they are reinvesting back into themselves, hopefully getting those massive rates of return. I just think at this time it's just slightly overpriced from my perspective. Again, do your own research, because my desire or my checkpoints of getting a company, buying a company, they're going to be different than yours. So this is just hopefully to be used in conjunction. But hopefully you enjoyed the video and have a great rest of your day. Thank you so much.